We had great gains yesterday, 1.4% gain on the all-share. We had the top 40 at its best level since early August, back above 25,000. It looks like we're pulling back a little bit today. Is there anything specific out there, or just a little bit of consolidation?
A bit of consolidation, I think a bit of profit taking. Yesterday we had very good numbers out of China. We had the Basel results come out to say that the banks would have quite a few years overseas to get up to the right standards. So there was quite a few good economic pointers yesterday, and that market moved up quite aggressively yesterday. So I think a bit of profit taking coming in at the moment. And the consolidation as well, as we see the dollar still weakening slightly, but we've got strong commodity prices. So a bit of a seesaw battle today. I think we're around about flat at the moment.
How about volumes, Rob? Because volumes have been quite light throughout August, in fact. Are we seeing volumes picking up? Are we seeing conviction behind the moves we're seeing on the markets?
Well, yesterday the volumes were quite good, above 10.5 billion yesterday, so there was good volumes and on an up day, which was quite positive. But generally the volumes haven't been very strong over the last month, and you would want to see consistent volume of about 10 billion or more for a consolidated period to confirm an uptrend in the equity market.
Of course, we have futures closeout coming up on Thursday here in South Africa, futures closeouts elsewhere around the globe as well. What are we expecting from that, and how's that going to perhaps support the market going through this week?
Well, at the start of the day there was about 100,000 contracts that still needed to be rolled on the index, and of that probably 50,000 of it is part of the options which will expire, so 50,000 contracts left to roll. It's not a very big portion left, but I think there will be support into closeout, and I don't think any selling will come in over closeout period if we take it just looking at South Africa. Obviously a big move in the Dow would move that, would change that slightly, but we expect it to be relatively firm through closeout.
Of course, you mentioned commodity prices, and we have seen copper prices, the oil price as well, are trading very close to $80 a barrel this morning. It's pulled back a little bit since then. Do you think they're just being boosted by that Chinese industrial production number we saw over the weekend, because it seems to have given commodity prices some legs?
Yes, definitely it has. The other thing on the oil side is that there's a pipeline between America and Canada that is leaking and has been under repair for 5 days. So there is a bit of supply issue on the oil side as well, and that's pushing up the oil price as well. So we'll see how long that pipeline takes to get repaired. But if it takes another 5 days, I think that oil price will stay quite firm.
Of course, we are getting US advanced retail sales out this afternoon, some other US data as well. In the meantime, we had UK inflation numbers out, CPI rising by 3.1% last month. We also had that ZEW confidence index out of Germany, and that disappointed, minus 4.3 for September, and that's down from 14 points in August. So it looks like there is still some negative data feeding into this market.
Yes, on the CPI side in Britain, it just shows you that there is inflation in England and not deflation. So that can be seen a little bit as positive, but obviously they need the growth to go with that. So they need that growth to come through. On the German confidence numbers, you know, they've outperformed everybody over the last 2 or 3 months in Europe, and I think some of that sentiment is now dying down. I think people realise they got a bit of a spike, good exports at one stage, but Europe's still battling. And they really need a very strong China, and China to be importing as well.
And Robert, we're still seeing foreign interest in South African equities at this stage.
Yesterday we had some good foreign flows come into the market. 6% of our market was net foreign buying. So we're still seeing money come into South Africa. You see that even after the interest rate cut, people coming in to buy our bonds. So money's still coming into bonds, not just equities. And I think when they stop buying bonds and interest rates have come down, we'll rather see a full flow into the equity side. So currently a lot of the foreign flow coming into bonds, and a portion of it coming onto the equity side.
What sort of equities are they going into? Because of course retailers have been in favour with foreigners this year. Are retailers still attracting money?
They are attracting money. We saw good flows into Truworths yesterday. They hit an all-time high. They've come off today, so there is still foreign money coming into the retailers. We deem them as being quite fully priced, but going forward, if the growth in South Africa starts to improve and they've got growth potential into Africa, they still have got potential to go a little bit further, but they are fully priced. But foreigners still seem to like the yield that they're getting from these retailers, and money still flowing into them quite firmly.
Now, of course, we saw financials doing pretty well yesterday. The banks up quite nicely, and of course that was really responding to those Basel III requirements that are going to be phased in over quite a long period. Banks under pressure today. In fact, FirstRand is the bottom of the top 40. It was just a short while ago, and yet we had results out a short while ago that looked pretty good. 34% growth in headline earnings per share, and that dividend almost doubling, and yet that pullback in FirstRand share price.
Yes, FirstRand had a very good run up into the mid 20 Rand 50, 20 Rand 60 level. I think profit taking coming in there, the results were good. But consistently throughout their statement, they're saying that going forward they're going to battle to find growth. They're looking maybe for a foreign partner. They're trying to get exposure into Asia and into Africa, and without those exposures they're going to battle to get growth, and a lot of the improvement in their numbers is coming from improved bad debts and not from more growth. So I think the market has just seen that as a consolidation period, take some profit. If they got these growth areas going, then I think people will come back into the banks, but all of the banks are relatively fully priced and looking for growth going forward.
And of course we had yesterday MasterCard and Visa being downgraded globally, and that's really due to the outlook for the card businesses, and that's a big earner for local banks as well, isn't it?
Yes, the card industry in South Africa is very big for the banks. It's a very big earner for them. And we saw MasterCard and Visa get downgraded in the States. And the reason that is that they just don't see the consumer being able to spend. There's still high indebtedness in the local consumer. And there's going to be pressure on credit card growth and on new markets as well. So that's a bit difficult for the banks, and they'll be battling to get revenue from there.